All right, guys, welcome back. Stocks by the numbers. Real quick, wanted to do a quick update here on Alcoa Corporation, ticker symbol AA, listed here on the New York Stock Exchange. This is an aluminum company, was absolutely raging here, if you recall, back 2020, 2021. The stock going from sub $10, rallying all the way up to almost $100. And then you can see almost around the start of 2022, everything began chunking down and falling off a cliff. Aluminum futures began dropping, aluminum prices declining, obviously, when the underlying asset that the stock is directly connected to consistently drops in value, they're going to take the stock down as well. But also, more importantly, you can see that it had a nice rally back up here to the top of this range going into the end of the year, and then as soon as the ball drops, you can see the weakness and the stock beginning to chunk down, right? So now we're in kind of like this long-term, looks like, I want to call it like a long-term consolidating channel, even though we could potentially be setting up like a long-term wedge, meaning that this quarter here, estimates mid-April, April, that would be 4, so 3 months later would be July. So potentially around the July quarter, or it could even pace itself going into the October quarter. Because remember, we have elections here in the States, 2024 election year, right? That happens first week of November. So if they wait and keep it down here in this consolidated channel and keep it flying, not really flying underneath the radar, but bring it out of the spotlight, so to speak, so that there's not a lot of attention on it, then it can just slowly continue to drop down and consolidate inside of this channel. And again, it might take 2 to 3 quarters. However, it could potentially line up and pop itself out mid-end October during that earnings report, and it can continue to rally up if and when, in my opinion, probably Donald Trump most likely looking like the front runner here for 2024 elections. But obviously only time will tell. Anything can happen. But what I wanted to show you also, more importantly, was this support trend line here that I'm seeing. As you see, this is going from the bottom here, October 23rd, 2023, connecting to these candles here. December 12th, 13th, 2023. And you can see I just kind of drew that trend line across there. And that right now is, in my opinion, that's our support trend line. Okay, so what I'm seeing are a couple of things. First of all, we looked at this stock several months ago. I think it was like back here around when they posted earnings. And we can see a nice beat on the top and bottom line. Continued to drop, right? Because aluminum futures were dropping. Now you can see here the following quarter, they had a big chunk of a miss there on the profitability side by around 8%, coming just about in line with a slight beat on the revenue side. And they gave the stock that little bit of a bounce there back to the top of the channel, as high as 35 and change, we can call it. And then it rejected and began to drop back down. The company recently reported earnings almost about a week ago, right? January 17th, the company just reported earnings, and you can see you have now the exact opposite report that took place here on the EPS side. You can see they had an 8% miss on the EPS side the quarter before. Now they come in and beat analyst expectations on that loss, making it much more narrow here, coming in about 34% above analyst expectations. Revenue still in line. That's the one thing I noticed about this company, right? They want to beat it up with the aluminum prices and any potential misses that they might have on the EPS side, but the revenue does seem stable, I will say that. And even though over the last couple of quarters and years you are seeing slight decreases in the revenue that the company is bringing in quarter over quarter, number one, again, aluminum prices are going down, right? So they're going to make less money technically, but also, again, they're coming in seemingly consistently above analyst expectations. So that's why I still say, in my opinion, I think Alcoa is an excellent longer-term stock. But of course, unfortunately, you have to play the environment and the market that you're in, right? So we understand why it was running up, and now we can understand why it was coming down. But coming back to my trend line here, again, I'm seeing basically just weakness from the time the ball dropped right here. You can see, and again, I know the technicals lined up and it rejected off the trend line, but you can see January 2nd, it began to chunk down. January 3rd, it chunked down even more. It was bouncing around, testing the 200-day moving average, I believe. We'll get to that in a second. And then chunked down and went even lower. we can see a slight bounce off of this fib here, right around about 26.25. But in my opinion, I actually think they could potentially run it up here to this fib of about 28.21. I'm looking at a 1-year chart, by the way. These are my 1-year fib levels. But in my opinion, we could potentially see a little bit of a bounce here up to about 28.21. But then technically, I do think it rejects and comes back down here to retest this trend line. And as you see here, what am I looking at? January 30th, all right? So maybe about over the next week or so, we could potentially pull back. We're talking about, a 10-15% drop here, potentially to sub $25. So, of course, overall for the longer term portfolio, if you've been building a position in AA, now with it down here at sub 30, I can appreciate the fact if you're just grabbing shares whenever you can and just trying to build a position and potentially average down. If you began buying up here in the 40s and the 50s, completely understandable. Because in the long term, in my opinion, the company still looks good, right? They just came out, that was Q4 of 23, closing out the year. And we can see that even though revenue is down, roughly like 20% from the highs it was here in 21 and 22. For 23, the company still brought in over $10.5 billion in revenue, right? And we have a market cap right here of sub $5 billion. So that's why even if the stock, in my opinion, rallies back up and gets in line to that annual revenue, we're talking about roughly 100% move from here, right? So we're looking at like a $55 stock. But again, we have to find that perfect storm where the technicals line up with the fundamentals as well, and that of course is what makes it very difficult. But in my opinion, again, if we're talking about perfect best case scenario, I would probably wait for the rejection down here of a couple of dollars and then scoop it up and try to catch that climb again. But overall, the company's still paying a dividend, yielding out about 1.5% here, and it's a company that we're going to continue to need. And almost reminds me of U.S. Steel again, right? Anytime we looked at U.S. Steel, the numbers looked so good, it looked attractive, and, we could have said, well, it just doesn't make sense on paper as to why this stock is not moving. And then what happened? The stock was sub $20, slowly rallied on its own back into the 20s, and then all of a sudden the bids started to come in, right? 35, then they had multiple bids above 40, and then Japan Nippon Steel came in $55 a share, right? So the stock literally over a little bit of a year's time went from sub 20 up to a $55 bid. And in my opinion, it's probably going to continue to remain valuable, of course, but it's a separate story. But Alcoa here, excuse me, switching over here to stock charts, I just want to show you, see this weakness that takes place here right as the ball drops. Let me throw up my Bollinger Bands for you real quick. I just want to do this and then I'll let you go. I don't want the video to go too long, but you can see how it chunked down right below the bottom Bollinger Bands and just continued downward, right? So if we come here January 2nd, we can see, look, there's the drop and then there's the gap down, and you can see how it's fighting to get back above that 200-day moving average and regain that momentum to get back to the top of the Bollinger Band range. However, it rejects here hard and then begins to chunk down and not only get back to the 50-day moving average, but reject there as well and drop back down. And now we have our big red candles with a little bit of a upward consolidating channel taking place, right? So we could potentially say we have kind of like a bear flag forming. So that's why I think, in my opinion, we may take another leg lower before we do take another leg higher. But overall, I mean, even if we're talking about $24, $25, $28 a share, in my opinion, as I laid out, looking at the numbers, I still feel that overall, Alcoa, good company, and should continue to grow over the years. And of course, if aluminum prices begin to make that U-turn and start to climb again, which in my opinion, I actually think they might do. So that's why I think longer term, I think this stock is going to basically bounce off of these bottoms and these lows and start rallying up moving forward. But I wanted to show you guys what happened right after the ball dropped and the weakness it was showing around the 200-day and now obviously recently the 50-day moving average as well. The RSI on the daily sitting here a little over 40.5, and we can see that the stock does kind of react properly, I guess you can say, with the benchmarks. Again, RSI, benchmark relative strength index, that's what RSI stands for, and usually the benchmarks are 30 and 70. So when you see the RSI around this 30 level, usually a lot of traders will notice that and they will basically come to the conclusion that the stock is now oversold, and that's where it potentially finds its bottom, begins its U-turn, and has a nice bounce. And of course, inversely, on the flip side, 70 at the top usually is the benchmark for the RSI being for the RSI showing that the stock is overbought. So when traders see an RSI 70 plus, they may start to take their short position or begin to accumulate puts, expecting the rejection and the sell-off and the drop back down to earth. So, of course, we know when we look at stocks, anything can happen. But it is looking like, in my opinion, Alcoa may take a little bit of a leg lower and then potentially find that bounce and should be good longer term. Obviously, the MACD crossed to the downside and began slipping, but we could, again, if we take another leg lower, of course it'll drop lower, but then we could potentially have that bottom curl and begin to curl back to the upside. Switching over here to the weekly, we can see RSI. Yeah, see at points it occasionally gets above or below the benchmarks, but overall it does seem like it's following that this RSI rule, quote unquote, RSI rule, so to speak. And you can see that even here back in mid-October, you know, they were beating it up, they brought it down, but you can see the RSI got down to about 30, slight sub 30, and then, you know, it began to move upward and then had that big explosion. So, again, you know, not everything is definitive and black and white and crystal clear, but here it's looking like, you know, it is for the most part following this RSI rule, but of course anything can happen. But you can see how it hit the bottom and then it rallied up and popped up and now it's dropping back down, right? So it's going to probably, in my opinion, come back down and retest that bottom there of that support trend line we showed, and then boom, potentially pop back up to the low 30s there and try to retest that 50-day moving average, right? Because you can see the moving average is now slightly pulling down with the price of the stock. So by the time this drop happens and it comes back up, this moving average could be down at like 31.5, 32, making it even easier for it to come back up and retest. But we'd have to keep an eye on the mid-Bollinger Bands as well. You can see, let me see if I could zoom in for you a little bit. Yeah, you can see if we zoom in, you can see that there you go. You can see that the stock, as you see, chunked down below the mid-Bollinger Band, and then for the week it came up and stopped right there at the mid-Bollinger Band and is currently sitting at 27.68. So that's why, based on recent weakness since the ball dropped, in my opinion, I do think that the stock rejects and they're going to bring it lower. And initially, a lot of people may not understand that. And again, you know, it's short-term technicals, but at the end of the day, also, we have to remember that sometimes it seems like the companies that, in my opinion, are undervalued in the numbers, and especially even sometimes after they come off an earnings beat, all of a sudden you'll see weakness and you'll see the stock sell off, and it doesn't make sense. And if you bought like some short-term calls or something, you may just, you know, take the loss, you know, cut the position and just move on to the next thing. When in fact, all it's really doing is consolidating, you know, coming back down, retracing to a fib level, or potentially coming down and touching a support trend line like we drew out, and then that's when the bounce is going to happen, and then the stock is going to look strong again, and it's not going to make sense for you. However, like I always say, in my opinion, you are much better off following the money. Just follow the numbers. And again, this company, even though revenue has been slightly decreasing, they are coming in above analyst expectations. They got beat up the quarter before because they missed on the EPS side by 8%. Now this quarter, they were expecting a large loss, I believe, of about 85 cents. The company posts a loss of only like 50 cents, beats that EPS estimate by like 34%. So that's why technically on paper, in the numbers, the company did beat earnings and does look you know, pretty decent in my opinion. And that's why I'm saying I feel like they're going to bring it down first, which is going to throw traders for a loop, and everyone may potentially liquidate the position for a loss, and then they're going to potentially bounce it from that trend line and bring it back up here into the 30s and have it retest these moving averages. But that's just my opinion, and I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, and of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are very rocky, they're uncertain, they're volatile. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Catch you in the next one.